podcast. So today we're talking about impact investing. Impact investing has emerged as a powerful approach for driving positive social and environmental change while also generating financial return. My guest today, our guest today, is one of the leading voices in the growing global impact investing movement. Cliff Pryor is the CEO of the Global Steering Group on Impact Investment. This is an independent global steering group catalyzing impact investment and enterprise to benefit all people and our planet. Cliff himself, he has dedicated his career to impact. He previously worked as the CEO of the Big Society Capital. This is the UK wholesale social impact investor and a market developer, and also led organizations focusing on social entrepreneurship, mental health, eldercare, and homelessness. Keith has advised government, regulators on social innovation, and co-founded several enterprises. So today, Cliff will be discussing the origin and evolution of impact investing, how it drives real progress on global issues, and his vision for the future using finance as a force for good. I've also made sure I touch on with Cliff about the just transition, what it means for the world, but also for Africa. And we'll finish off talking about a couple of events that you definitely don't want to miss. You have the Africa Climate Summit, but also the GSD Summit in Malaga. So listen to us, enjoy it, and may the sun be with you. Thank you, guys.
Welcome to Renewables in Action,
your unique podcast.
Do you want to understand the renewable energy sector, its trends, business models, and insights? Are you interested in learning about the challenges and opportunities, as well as how you or your business can thrive in this new world? Welcome to Renewables in Action, the show that helps you realize your potential in this industry, which is the fastest growing source of energy in the world. Here is your host, Tony, to you.
Hello, Cliff. Can you hear me?
I can, yes, thank you.
Here you are. Here you are. Good morning. So how are we doing today?
Doing very well, thank you. And good morning to you as well.
Excellent, excellent. So I just have a brief introduction of who you are, right? I didn't really extend that much because I can tell you it could have lasted a whole hour that we have, right? Or maybe less than that. But just to give justice to people listening to us, because I'm sure they will be very interested. So I would appreciate if you could properly introduce yourself and also introduce the GSD group that you are leading, please.
Thank you, sure. So I'm Cliff Pryor. I'm CEO of the Global Steering Group for Impact Investing. And I've been with that for 3.5 years now. Background with Big Society Capital and Unlimited Social Entrepreneur Support. What is the GSG? We do two things and then bring them together. First thing is development of impact investing practice country by country. There's 38 countries now with a national advisory board for impact investing. Many more coming along as well. And then we engage in the big policy changes. That's everything from the global harmonized standards of the ISSB, reporting regulations, and moving on towards what's called impact valuation. So, putting monetary amounts on the good that you do, the bad that you do as an investor. And we try and bring these two things together because, that policy development is in the next 3 to 5 years will be a completely new financial world order. It will be a financial world order where it's much easier to do the good stuff and very painful to invest in bad stuff. But we want to put these two things together, the countries and the policies, so that this new financial world order is not just something that's driven from Wall Street and a few other big financial centers. It's also about every country having a say about the design, knowing what's coming along, having that voice. That's our goal.
That's very, very impressive. You started quite strong there. So new financial order. I'm sure people will be happy to hear more about that. We'll have the chance to expand it a little bit more. But just allow me to come slightly back into you first. I'd like to understand what originally motivated you to get involved into investing or social entrepreneurship. Was there a specific experience that sparked your interest?
Yeah, well, way back, which is a long way back for me. You can see silver hair. You know, I was in the social sector as working with very distressed adolescents, with social housing, with whole mental health, physical health, whole range of different social issues. But alongside, I was an entrepreneur. I had three enterprises by the age of 28. One of which is still around, embarrassing me after all these years. So when the opportunity came along with Unlimited, which is the UK's support agency for social entrepreneurs, that was just absolute heartland for me. Somebody gave me a job for what I really wanted to do in the first place. It's great. And it became more and more successful. And of course, successful entrepreneurs become enterprises, become in need of finance. We got involved in angel investors and then in venture capital. So that led me on to working in Big Society Capital, the UK's wholesale impact fund, which actually is largely funded out of dormant accounts, which is an interesting approach. There are now quite a number of other countries that have used something like that approach. And so putting together running a financial institution with the social side and the entrepreneurial piece, well, yeah, that's natural then, isn't it? That's what the Global Steering Group does. It's impact investing, country by country, the policy side, the investing side, the social side, all of that coming together. I have to say, none of that was planned. It just evolved.
Okay. That's interesting. That reminds me a little bit, because I've always said to people, I'm an accidental entrepreneur, right? So I know people sometimes say that all the way since I was very young, I always knew I wanted to be an entrepreneur. For me, it definitely wasn't the case, but it just so happened I had the opportunity to do it. I decided to go for it, and obviously I love it. But yeah, so
that is an American thing about, how many people does it take to change a light bulb, which is a sort of sarcastic thing. Yeah. And I've always thought of it the other way around. How many light bulbs does it take to change a person? There comes a point where people feel this is the right thing for me, and I'm going to do it, and I'm not going to stop doing it because anybody says it's difficult. I'll just do it. And certainly when I was in Unlimited, we saw 1,000 people every year just get that click. And in the GSG, you see it as well. I mean, it can be really tough running impact investing in a country that hasn't heard about it yet, and you're having to build it from scratch. But people are just absolutely determined, and it just takes a matter of time before everybody else wakes up to it, and there you are.
I definitely resonate with that. Definitely. So how many light bulbs does it take to change the person? I love it. I'm probably going to borrow that from you if you don't mind. So the Global Steering Group, so as you mentioned, I think it was formed in 2015. So you may correct me there if I'm not right. But it's still a relatively new organization looking at the ambition that you have. But it's good to see that it's growing, right? Before I heard you speaking, you were talking about 33, 36, now with 38, and just speaking to you before, I know it may still increase, right? So what would you say are the biggest accomplishments and impacts so far? Yeah, I'm sure there must be some quite significant that the group has already achieved.
Yeah, so I think the absolute bedrock of this is the mutuality across those 38 countries and the others coming along. But if people were trying to do it on their own, hitting wall, whether it's your government doesn't engage with it, with your investors don't engage with it, whatever it is, almost every problem that a country in the GSG faces, somebody else has already faced that problem and found some solutions for it. So that mutuality,
community.
yeah. I think the other side of it, is that policy work, which is, really, it's a really dramatic set of changes. And yes, would it have happened anyway because of other imperatives? What's happening with climate and so on. Yes, we can speed it up. And the other thing that we can do with that is make sure that or do our very best to make sure that the people side of it is equal to the climate side of it. That this is. Let me just put this in a different kind of way and stop the phone calling. Here we go. So, in what we're thinking on this is that we know that the climate initiatives have to have to happen, but they can be very disruptive to people, and we're trying to bring those things together because we know that you can't get the environmental changes that are necessary without the support of the public. Equally, the public is being harmed now, particularly in Africa, more than ever in Africa, in terms of temperature, in terms of storms, droughts, and so on. So, from both sides, you have to look at both, and that's an approach that we call just transition.
Mm-hmm. Yeah.
So, these are big interventions. I guess that our founder, Sir Ronald Cohen, would definitely say impact valuation is the big achievement. Now there are a number of organizations collaborating towards an impact valuation approach where, if you're an investment, there's calculation of, what positive benefits you're putting forward, but also what harms you're putting forward, put monetary amounts on those.
Yeah.
And you can, once you start thinking about that, you've got a proper financial system that regards the planet and regards people. And that's not something that we've had previously. That's a massive, massive change. How will that actually, get into the system? Well, if you've ever seen any area of, let's call it sin, the sin stocks, it might be tobacco, it might be whatever it is, coal mining, etc. Governments just tax it. I mean, governments can't stop themselves. If they see something that the public thinks is a bad thing, they will tax it.
Yeah.
Well, I think, we're thinking 3 to 5 years, a massive change. And we want that change, as I say, to be, something that every country has a voice in, every country knows about it, and the social and environmental aspects are considered together.
And that, I think you've raised a number of points that are very interesting to debate more. Yeah. So let me come back, take you a little bit back. Yeah. Because what you say is that what we're doing here is building a global movement. Yeah. And with everything you say there, it makes sense that normally every country should want it, right? So you definitely want investment. You also want investment to impact the social aspect, also the environmental aspect. But what are the challenges, roadblock, that you're facing to growing this movement globally? Because the thing is, I would like to think that, there's more than 180 countries across the world. So yes, you're growing at a rapid scale, considering that you're less than 10 years old, but still. So what is stopping the 100 plus other countries from adhering to just what you're just saying? Because it makes sense.
It does make sense, and we would love to cover all the 200 and it's over 200 countries, But our immediate goal for our 3-year plan is to get to 2/3 of the world's population with an impact investing approach, and with at least 50% of the poorest included in that. So we're not leaving people behind because they don't have a big finance center, etc. So that's our immediate goal, and we think that is, that's a tipping point. And of course, there are some really major countries, and India already has an impact investing practice for the GSG and is expanding out from Delhi to other parts of that 1.4 billion people. And we're also discussing with China. We are fairly far along the line with Indonesia. That's nearly another 300 million people. So there are some really important places just by the population, and there are also some really important places that are much smaller but have really big financial centers. So, if we were trying to take a bite of the whole world, we wouldn't get very far. But we're focused on getting to that tipping point of 2/3 of the world's population. After that, we think, everybody else will join together.
You're absolutely right, and in that sense, it makes sense to target those big countries, with really a huge population. Certainly, India, Indonesia, China, and I guess as well. Yeah, you wanted to say something?
Within Africa, obviously, there are already 4 national advisory boards and quite a few others that are coming along rapidly. But you've got a number of 100 million population countries, not just Nigeria, but DRC and Ethiopia, in Egypt. Really important countries, and just because they may have a low level of financial activity and investment activity, that shouldn't stop us. That really should not stop us. It's just a different kind of finance. In the majority of African countries that I've been visiting recently, it's MSME finance that is the number one thing. Okay, in that case, that's what we support. That's how we encourage. That's how we get that mutuality going. And one of the fantastic things that we've seen just recently is an Africa impact investing group, 11 countries working together, collaborative. It's brand new, so they haven't done much yet, but coming together means that they will have a lot of mutual support and speed up the development, even in countries where it's really difficult.
Yeah, and I believe that recently you actually had your first Africa Impact Investment Summit in Cape Town. Am I correct?
Almost correct. Yes, but it actually came from the 4 African countries with national advisory boards. So whilst I was delighted to participate in it and speak at it, it came from Africa.
Okay.
That's really important. There has been, a lot of well-meaning but not very effective approaches to Africa.
Okay.
Fantastic, absolutely fantastic to see that, as that it came from the African countries. They developed it, they launched it. It was fantastic, and they will do it again, even better next year. I think they're planning in Kenya next year.
Okay.
So yeah, really good to see that. Almost. Actually, it's one of the things that we're seeing now is that the regions are getting more and more important. Latin Pact or LATAM comes together through an annual event called the FLEA, which is a really amazing impact investing event. Europe comes together. Of course, Europe is, it's looking very much to the EU and the European Commission and so on. Now Africa coming together, and we know from what happened in LATAM and what happened has happened in Europe is that the mutual support and cohesion is much more effective than it just being one country by one country by one country.
Yeah. So still some criticism out there and cynicism as well. That's saying that impact investing is just a window dressing, initiative, and they say that if it focuses too much on financial return over social impact, And when you actually look at social impact, as I say, it's not really meaningful changes that are happening. So how would you respond to such a critique, and how can impact investors, balance those dual goals, would you say?
Yeah, so I mean, in the very early days of impact investing, this was absolute, dedicated people, 100%. You would know that, okay, if their impact practice is not absolutely perfect, they will make it perfect. And then in a sort of second round, around sort of 2017, 2018, we saw mainstream asset managers, big banks, etc., start to deploy impact investing. And initially, they were not exactly perfect, not by any means, but actually, in the next few years, have improved impact practice really quite substantially. And so this is something that Elias Masilela from South Africa said in one of our board meetings, is that it's better to have imperfect impact investing than no impact investing. We can't afford to be purists. Yeah, it's if you're working very intensively with a philanthropic approach, and you can afford to do that, you can be absolutely perfect on the impact. If you're doing it from a $1 billion fund, it will not be perfect, but it will be big, and we solve some very big problems. The next step on that we're seeing, because of this this big financial system that's coming along, in some ways won't be so reliant on very dedicated people, because if you make it much easier to invest in the positive work and more painful on the negative side, well, you can be the most hard-headed, I really don't care investor. You're still going to do the good stuff because it's easier to do. So those three stages is almost a sort of impact 1.0, 2.0, 3.0 is I think will solve both the very small scale, the very dedicated, the very difficult areas, which will be below market rate, even philanthropic. You'll have the middle ground of mainstream asset management, but you'll also in a few years' time have a system which just drives people naturally towards the more positive side of things. There are not enough angels in the world. So we can't rely just on that to solve the problems, the social problems, and the climate problems that we're facing.
Excellent. And you talked about policy, which is an important component of GSG, which is actually the second one that you wanted to really look at after the impact investing in different countries. So what role does policy and government regulation really play in impact investing? And what kind of policy changes do you think really accelerate this field?
Yeah, so the key components of regulatory reporting, global harmonized standards, and impact valuation, those three things together work. Now, which countries are taking that on? You can see in Europe the most advanced approach of that. It's a classic sort of European approach where you put out the regulatory system and then look at the market and see what happens. So you need to then adapt, because the market is always somewhat different to what you think. The US approach is throw loads of money at it. The IRA approach is financing the good stuff and making the negative just less available. It's interesting to see what happened in Japan. So Japan, a very hierarchical organization, very hierarchical country, and a relatively new prime minister opened up an approach called new capitalism. So yes, you want the returns, but you also want to look at the climate, and you want to look at the people. And that changed from pre-COVID. They had about 800 million AUM of impact practice. Post-COVID, 12 billion. They're expecting 40 billion by the end of this year. And, that was just, okay, the boss says, this is what. So everybody starts working on it. Lots of, really, really tough examination of what is impact and what are the mechanisms and how do you have the trained people to make sure it works and so on. Every country's got its own approach. It's got its own holdbacks, its own opportunities. From the GSG point of view, that's diverse by design. That's what we want to happen. And it will mean that the impact movement is genuinely appropriate for each country. At the moment, impact investing is only around 1 to 2% of listed assets. If you look at ESG framed funds, that's well over 30% of listed assets. We need to get to, our goal right now is to get to the 10% level. Why the 10% level? 10% level is a tipping point in many change processes. So that's our current goal. That's a goal that we set out in our global leaders meeting in Istanbul earlier this year. And many countries have been now working on what does that mean for us? What does it mean for a country like Zambia? What does it mean for a country like Japan? Very different approaches, different ways of getting there, different types of investment that are appropriate, but building up towards that point where it can't be ignored anymore and people start seeing it. I suppose that the place where you see that already happening would be France, where there is a mass population interest in impact investing, solidarity investing in French terms. And we talk about a big event of 1,000 people every year now. Well, this year's big impact event in France, 38,000 people. So this can become something that is mass interest, not just the little world that we live in the investor side. Spain's going through that process as well, driven more by the big banks than by investments. But that's just another difference of how finance works in different countries.
Yeah, and that's actually quite interesting. If you talked about those events where you had 38,000 people actually coming together. So, the question for the GSG: does an organization need to wait for the country to join the GSG as a member to be part of initiative, or it could be just led individually by just any companies? Because I like to, because a lot of what you say clearly resonate, and we're talking about moving from the single bottom line to the triple bottom line, which is a planet, people, and profits. That I'm sure you heard about. That seems to be one of the mantras that the new Japanese Prime Minister is pushing forward, which is great. So that's what led me to ask this question. So 38 countries, but what about countries that are yet not affiliated to GSG? Can organization still be part of your initiative, or whatever?
Yeah, so the first stage for a country that hasn't got into this system, is a task force, and a task force will look at okay, who are the leaders, and we then have a process to to help people get to the point of a national advisory board. So what are the key building blocks of that? Obviously, there's a due diligence. Who are these leaders? What's their background? Are they genuine? That is an important piece. But also is an openness. So we would always encourage the initial group to to put on events, make sure that that they're not missing other people who would be really interested to join in. And what the last thing you want is for a national advisory board to be saying, yeah, here's our team. Then somebody else comes and said, why didn't you ask us? Why didn't you ask us? Because that starts to create some sort of negativity. We want this very very positive. And then the other key building block is being focused. What is it that you're going to solve? And that will be very different in different countries. And everything from high level mobilization of capital in some areas, in others. And take the example of the Central Americas group. So that's 6 countries working together, very small countries, small financial centers. Hardly anybody knew anything about impact investing. And so their starting point was actually on communications about impact investing, out of which, of course, came people bubbling up saying, that's what I've been doing. I didn't know that was the name for it. And so they can start building a bigger. So it's going to be different in each country. Take the situation in Indonesia. That's 6,000 inhabited islands. So they have a big problem. What is their set of solutions? Are they going to focus on Java, which is the most populous area, and then build out? Are they going to try and go regional? What's the approach appropriate for each country? And we're not trying to tell them do it this way. We are suggesting just the building blocks that get towards a national advisory board. In Africa, 4 national advisory board countries at the moment, and at least another 7 in task force stages, some of which are now very close to joining in as a national advisory board. I really hope that Kenya is the next one, because if we do the next Africa Impact Summit, it just has to be launched. It has to be launched.
Absolutely, and you're right. To the Africa Energy Summit, Africa Climate Summit, it's happening next month in September. And talking about Africa, and one of the things that you mentioned before, and I wanted us to come back to that, is the just transition. And I definitely want us to crack on this question, because it's a difficult question, especially for the continent, because a lot of people are wondering whether this should be a focus at all for the continent, as opposed to energy access, because we know there's still a lot of people that are lacking energy access. And they're saying, if we're getting energy access, why not using all the resources at our disposal to get to to get a foot on the ladder, get the development going? Because at the end of the day, we only contribute to just a small percent, 4% of the global emission. Yeah. And I know when I was talking to you, I'm not going to mention the example, because I want you in particular to talk about that. You talk about a specific case in South Africa, which I found very, very interesting. And I wanted just to come back to that. So the just transition, how do we achieve that, solve it in Africa for Africa?
Yeah. I mean, just thinking about it from the global perspective and then into the African perspective. So, in the global perspective, we all know that the climate change is happening, and it's happening more rapidly than people first thought. We know that there has to be some really major changes to reduce greenhouse gases. We are now starting to see in almost every country in the world that the climate change is already harming people. And in fact, some of the data now suggests that the greatest harm for particularly vulnerable populations is now the climate change. Droughts, fires, storms, the whole piece. Equally, we know from many jurisdictions that the public rejects climate action if it hurts the population. We have to get these things together. We have to use the just transition approach of looking at the economic side, looking at the social side, looking at the community voice as well, actually listening to what's happening. So coming back to Africa, and the most this is really the tightest problem that we've seen anywhere with the transition is the Mpumalanga province in South Africa, where 135,000 miners will lose their job if the coal mines are stopped. And that is it is the economy of the entire province, and it would be such a huge change that this wouldn't just be about reskilling the miners. It would actually be rehoming. It would mean that the population would have to move across the country. And consequence of that is two years after it was launched, nothing has happened. I mean, plenty of plans, but no significant action. And I think that is where the just transition approach has been somewhat misappropriated by the global north, because as you say, the 4% of greenhouse gases in Africa, I mean, that's absolutely tiny compared to what's happening in the USA, what's happening in Canada, what's happening in China, what's happening in Europe, and in India. And that's where the changes and the just transitions should be focused on. Now, you can look at it the other way, because there are some countries, and many of those 6,000 uninhabited islands in Indonesia, they don't have any form of energy other than what they can carry in a kerosene can. So there are opportunities in some low-income countries to just jump straight to electrification, and that's great. That's fantastic. That's absolutely fantastic. But there is a big question mark about why global north organizations are so focused on a place like South Africa, when what they should really be focusing on is their own home ground. Yeah, absolutely the case. Absolutely the case. And but if coal mining is pretty awful for coal miners.
Yeah.
Okay, it's a job, but it's not a life expectancy.
Yeah. So let me attempt to maybe respond to the question, maybe allow you to also comment back on that, because I think that question is so important and central to me, because I see that all the time, right? And it's not an easy debate. I'm just going to play devil advocate here. Isn't it because, for example, the global north could be thinking, okay, I'm happy you, Africa, to do whatever you want to do because you know what is best for you, that's fine. But then come and ask me for money. Because if you ask me to come and then fund your change, still using old energies or resources that I want you to let go of, right? So what's the point to come and ask me for my money? Because for me to invest in those resources, as you're mentioning, so I will be to some extent breaking the promise that I've made to my taxpayer, because most of the time it's their money. So that's why I find it a little bit, and isn't it a little bit difficult where the change also is here. You can have, for example, Europe, investing into fossil fuel in Africa, and Europe, for example, refusing to invest in fossil fuel in here. I'm simplifying. It's not the case, obviously. I'm just simplifying on purpose. I just want to trigger some more comments from you.
All of this, when you really examine it, without all the sort of flowery names and so on that we put around it, when you get down to it, there's some really strange stuff happening. Yeah, so a just transition in a country or a part of a country where actually there isn't even coal mining or oil, you're just doing kerosene. Well, of course you would. That's a no-brainer to invest in electrification and go straight to it and jump all of the other problems. It's the global north countries that really need to stop their coal mines, stop their oil, stop their gas. Gas is probably the last one to go for, but and you've got these weird situations in China where there's greater electrification than any other country. I mean, that I think it's 55% of electric cars in the world are in China, but at the same time they're opening up new coal mines. Huh? And then you start looking at some of the new concepts, like what came out of Barbados, the loss and damage concept, and a good friend of mine said she gave an example of what that really means. So just loss and damage sounds good, doesn't it? Sounds like Barbados and other small countries are going to get some kind of reparation. Maybe. So what she said was, imagine you've got a car. You're in Barbados. You have a car. Your car is stolen. It's taken over to the UK, where somebody crashes it, and then they send it back to Barbados with a high-priced loan to repair it. That's what's actually happened. That is what loss and damage is actually doing. So yeah, there's a lot of there is a lot of language that gets in the way of what's really needing to happen. What's really needing to happen is that people who have no power supply at all at the moment, they really need electrification. In the global north, the countries need to persuade their populations that coal, gas, and oil should be phased out really quickly, and that actually some of the just transition in countries like South Africa, they're right down at the priority list, really. So why so much focus there rather than focusing your own countries? Answer to that is that the population is rebelling against it. It's become a Republican versus Democrat thing in the US, even in a very I need to be careful in a country like China, where you would think that the Chinese the party would be able to say what should happen, but even then, it will have some kind of revolt if people don't have their jobs. So this is not easy. It is really not easy, but we have to face up to the difficulties that are there. The UK is in this strange process. It's just seen Europe burn. I mean, literally burn across the whole of Europe. UK happens to have had the wettest country in many years, but it will hit us next, and we can just see it. And yet our politicians are saying, no, we should open up some more oil fields.
Yeah, I've heard it from Rishi Sunak. Apparently he's going to be announcing that and balancing that with some CCS project.
The logic of that is just crazy. It takes 10 years to open up an oil field. You would then make your money not out of the next 10 years, but out of the next 30 years. nobody's going to be allowing you to use that oil in 40 years' time. So it'll be a stranded asset. What are they thinking? They're thinking politics. They're not thinking in investment. You know, I don't want to be political partisan, but you know, the real logic is often sort of covered over by politicians, and you know, we all know that. We all know that.
I think my response to that, this is not yours. I was just confirm that that's mine. I think it's next year election. But anyway, let's move on to that. So the last two questions to me. So if there is one piece of advice that you can give to a young person interested in pursuing a career in this space, what would it be?
Whoa. Now, of course, people have different skills, and there are many opportunities, and people also have their, you know, where their heart takes them as well. So, you know, there will always be jobs for people who, you know, want to work in healthcare and want to work in education. You know, these are forever jobs. If we're looking very specifically at impact investing and the enterprise connection with that, yeah, there is going to be a few years where there are many new job opportunities for the you know, all of the new accounting, the impact accounting work. But yes, that's needed. But at the same time, make sure that you keep your eye on and your skills on AI. Because within a few years, those jobs will be taken by AI, and it will be the next level of, you know, of complexity and understanding. That's where you need to be. You need to be managing the AI, not being part of it.
I think I'm so happy you mentioned that, because it was going to slip my mind, because I wanted to ask you a question about what's the impact of AI on impact investment. So I think I'm so happy you mentioned that. If you can say something very quickly there, because it's very critical to me.
Yeah, I mean, we're already seeing some examples. There was a big marketing agency in India that has sacked 90% of its staff, replaced them with AI bots, and the customers prefer the new AI bots to the people. This is going to be a really big change. You know, we've had many big changes before, but not so fast. You know, like the industrial age, that was 300 years. The internet, that was 30 years. AI is going to be 3 years. So that the pace of disruption is going to be absolutely awesome. And yeah, for anybody who's interested in this field, please do get involved in all the different aspects of impact investing, from, you know, high finance all the way through to support for new entrepreneurs, new enterprises, all of that. Yeah, but look at the areas where the human being is necessary. And that is people to people. So some of that work with the new entrepreneurs, or, you know, if you can get to the heights of it, then you're managing the use of the AI rather than the AI being used for you.
Definitely, because what we don't want to actually reverse the achievement and breakthrough that have been obviously accomplished with impact investment. So let me come back to my last question for you, and I want to finish up with the annual summit that usually you're running. I think this year is going to be in Malaga in Spain. So I don't know. I'm hoping that I may be invited. So yeah, that's all my question.
You are not invited. It is compulsory, and yeah, we find a slot for you. So that's the 2nd and 3rd of October in Malaga. a wonderful place, which includes the Picasso Museum. So just a a nice little taster there. Really lovely place, and please do join. We have deliberately made our summit just next to the GIN, the Global Impact Investing Network, so that if you're coming long haul from Cape Town or from Latin America or wherever, you've only got a little short hop to get to the next one, instead of burning more carbon by having to do it twice. We're thinking about it there. We're thinking about it, and so you'll see almost all of these different areas that we've been talking about and more in the formal summit. And as ever, it's the people-to-people connections that people also want, and some fabulous connections that can be made there. So looking forward to seeing you there. And Tony, now that you've expressed an interest, I will put you straight on to our content lead, and we'll see you there.
Oh, that's a perfect demonstration to any young person there how you find yourself a job. I'm just joking, obviously. But sorry, you were going to say something to finish off, please? Yeah.
Hey, look, this is we are facing some very complicated and awesome challenges, and impact investing is, as you have mentioned, still pretty small. The more countries that we can bring together for impact investing, the more we can connect with those countries to the new financial systems, the better and quicker the development will be. This is not just a game. It's not just a long thought. Everybody thinks about 2050. That's 25 years ago. So that's another generation. We don't need to bother. Forget about that. The tipping point is 2030. Do it now. Get into this field. And get acting in it, because it will be the biggest change since the last ice age.
Yeah, and I think as far as we are concerned, we're definitely interested in helping you achieve at least a couple of objectives that I picked up, which is obviously to grow impact investment from 2% to 10%, because you said 10%, this is where we see the tipping point, and also making sure that you can reach out to the two-thirds of the world population, because this is also where we're going to see massive change happening. And I just want to thank you for taking time to come and speak to us, on this platform. I'm sure a lot of people will be interested. So you're doing a fantastic job with the 38 organization, but still growing, that you are leading. And I'm sure we're going to be hearing a lot more about those initiatives that you talked about today. So thank you for your time today, Cliff. And then I'm hoping that I'll see you very shortly. So have a good rest of your day.
Thank you, Tony. Really appreciate it.
Thank you. Bye-bye.
Bye.
Thank you for tuning in and listening to this episode of Renewables in Action. I hope you learned one or two things today. If you have, please do take action. Also, subscribe, rate, and review the podcast in Spotify or Apple Podcasts or any other platform that you like. You can reach out to me, Tony T, on LinkedIn to connect, to share your feedback. I look forward to speaking with you. Until then, may the sun be with you. See you next time on the Renewables in Action podcast.